Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So Bitcoin on the 4-hour, we are down here basically in our lower support zone in this in what we hope to be the next sideways range that Bitcoin trades in. As you can see, we need to get basically, well, realistically we need to get above about 42 and a half thousand, and then we can potentially see that move towards 44,000. If we can get back above 44,000, then we can at least come and try and test the old support, potentially as new resistance, try and populate price action at the upper end of this range, and ultimately try and have a go at breaking out the top. But we can stay in sideways ranges for a while, and we can also stay in sideways, basically not be in a sideways range, i.e. break down below, in which case we'll be looking at, well, around 38, 36, and then ultimately all the way down to $30,000. So yeah, that is what we are looking at. As I have said in yesterday's video, I do think it is unreasonable and unlikely that we are just going to come straight down from here. I think that we at least operate in this area for a bit, and also it is likely, I think, in my opinion, that we will have to come back up and test this $46,000 level, even if it's just to get rejected and come back down. But yeah, that is what we're looking at in Bitcoin. If we look at the Ethereum Satoshi pairing, it is in an area of support, kind of not wanting to break below that as of yet, but it has been a big move down. It probably wants to sideways consolidate and maybe drift up before, if it is to come lower, then move lower, or if it is to get supported here before then try and move higher. But like I said, we've got quite big moves here to digest. The Ethereum USD pairing, though, not looking ideal. Is trying to support this level, trying to get held at this level that we did join yesterday. Pretty much in the middle of no man's land. We've got around anywhere as low as 2,800 on the cards, unless we do get back above 3,400, we'll call it. Bitcoin dominance as well, not looking as bad. So obviously altcoins as a whole potentially not looking as bad as Ethereum in particularly, but yeah, it's Bitcoin dominance still above this big potential support zone of where I think the bull run will end up dragging altcoins into this year, but we shall see. So the main problem we've got is 10-year looking very strong. This is basically gonna be striking the fear of God into the Fed. They just know if this makes another move of the magnitude that it's just done, it is gonna basically just absolutely crash everything, and then it's game over. So this is what is having the drag on the stock markets, particularly the Nasdaq also, because Nascoin is particularly sensitive to high rates. But what we are seeing, and this is just my lowly opinion, for what it's worth, we are seeing this dollar trade down from here. And what I think, I guess is, again, I'm not a financial advisor, what I think is potentially playing out here is that the Fed realizes that we've been saying all along, you can't realistically raise rates because of basically this, and people can't afford this, and can't afford this to happen, to continue. So they're gonna have to potentially try either yield curve control, which will be bearish for the dollar, or again, just not do the rates, let inflation just keep doing what it's doing, and then just give people handouts so they can afford to basically survive, which again will be weaker for the dollar. And I mean, yeah, they're basically the two options, and price controls as well, which are not ideal either. But yeah, either handouts or yield curve control, because I think the bond market is telling the Fed that you can basically jog on with your rate hikes and your thingy. Like, the Fed is trying to pretend that it's not in a Ponzi scheme. And the market is just reminding the Fed that you are in a Ponzi scheme, and if you start to remove those bottom levels of that pyramid, I mean, what do you think is going to happen to said pyramid? So yeah, this, like I said, this is going to be striking the fear of God. This is a massively aggressive move. This is a very just I can't understate how central bankers are going to look at this and basically yeah, and just be petrified. So yeah, like I said, it's kind of telling me that the Fed is going to have to stop with its hawkishness, and obviously that is going to let inflation run. So that is going to mean that they're going to have to basically try and stop this stuff with yield control, or they're going to have to yield curve control, YCC, or they're going to have to or they're going to have to dish out UBI so people can basically afford to live. So whilst they spent most of forever basically dishing out money to the rich, they're going to have to start dishing out some to the poor, which ultimately, funnily enough, the money you dish out to the poor ultimately ends up in the hands of the rich. And I mean, it is just trickle up. I mean, pyramid schemes are essentially trickle up, aren't they? That is how they operate. So yeah, there we go. Some interesting things going on. Obviously, stocks did not close particularly well. They're below this level. Back in what is not a bad range though. But I mean, the stock market is like a shark. If it stops going forwards, it basically dies. So yeah, just bear that in mind. Obviously, see Nasdaq as well below the level it realistically needed to hold up here, but you could kind of look at it getting supported at this level, and if it basically gets back above, then great. In fact, what will actually be probably look good if we do just draw ourselves a little area here. We don't really chart. Obviously, you can see we don't chart too much on this asset, but yeah, we can draw this in. So you could maybe say Nascoin not looking as bad support wise. Obviously the Dow not looking as bad though, because obviously the Dow we're obviously seeing rotation from the tech companies into in commodities. So yeah, that's expected into basically cyclicals, into healthcare, into obviously commodity based companies, and utilities as well. So yeah, we're going to come out of the frothy tech. Tech obviously, which does well in low negative rate environments, which we are still in. Real yields are clearly forever going to be negative now, unless obviously we have a massive depression and we just have deflation. Basically, real yields practically going to be negative, but yeah, like deflation is the obviously going back to the fact that we're in a Ponzi scheme. Deflation is literally the enemy of a Ponzi scheme. So. It is the Thanos or whatever. It is basically the arch enemy of a Ponzi scheme. So yeah, that's what we're looking at. Oil literally ease off a little bit, probably to be expected with these lofty moves. Obviously we've got cold spells hitting places. We're getting like shut-ins with pipelines because of the cold. So yeah, it's gonna be an interesting next few weeks, I believe. I think we are gonna see one of those pivots. We are gonna see one of those changes in the market. We're gonna see the 10-yield. I believe we're gonna see the 10-yield. Well, not even necessarily the 10-yield. I think we're going to see the dollar potentially weaken from here, which I know is a pretty not mainstream call really. Everyone's loving the dollar at the moment, including definitely people that I know are pretty good. Macro forecasts are seeing we're going to enter into a disinflation or deflationary environment going into Q2, and that is potentially so. But what would stop that? Because the Fed's also going to see that on the horizon, and what is causing that is the Fed, and what can stop that is the Fed. So yeah, I mean, I'm expecting a pivot at some point. And that will obviously give us a pivot. Well, it's not even a pivot because, like I said, markets basically are just trending higher. We'll just continue with the crack up boom, and the same for crypto as well. That is my view as it stands at the moment. Obviously, we are all Bayesian here, so we will digest new information as it comes in. But as it stands with the information that I'm able to assimilate, that is basically what I think. And obviously, I am not a financial advisor, so always do your own research. And yeah, I shall speak to you guys soon.